Good morning, it's Harvey Jackson. Just going to get through some news here. U.S. crop conditions for winter wheat keeps getting worse. We can get through the whole report. Corn emerged is right on expectations of the 5-year. Corn conditions slightly lower than the 5-year average, but last week it was at 67 and it remained the same. Soybeans emerging at 79%. That is ahead of the 5-year pace. Soybean conditions, though, are just slightly behind the 5-year pace and dropped 1 percentage point week on week. Spring wheat, 87% emerged, so it's ahead of normal 5-year pace of 80. The spring wheat conditions are at 52%. So that's gone up like 5% or 5 points from last week, but still behind the 5-year average at 55. Winter wheat conditions slipped again. It was at 26 last week, and now it's at 25% good to excellent, so not good. And it's saying 11% harvested. I do have a clip from Kansas, and it's only like 5% harvested down there as of yesterday or last night. Indonesia races to plant rice early because of the El Nino. And again, you got to remember, some of these countries do get affected a lot more by El Nino and can actually really impact their conditions. India's one, Indonesia, Malaysia, all get impacted severely by these warming of the ocean temperatures. Trump and Israel are a little bit in conflict here, just with trying to get a truce in order. Israel-Iran trade fire for the first time since April 8th. I think I talked about that yesterday. Both halt salvos after Trump tells them to stop. Israel believes that brief fight may help secure its demands in negotiations, sources say. I'd just be careful with that. We've been talking about interest rates and the FX rate as well. So you can see they are usually running in tandem, the 5-year government bond spread to the US as well. I thought this was interesting. It's stated here now, again, I can't prove a lot of this, but the global oil system is offset almost 90% of the Hormuz barrels. And it just gives you a breakdown of how bypass pipelines are making up 7.5 billion barrels a day, reduced Chinese imports by 3.75, increased U.S. exports by 1.75. SPR releases in the middle at 1.5. Demand destruction actually by 3, so you get like 17.5 total of million barrels per day were offset. Here's a RBC leftist from the CBC, the corrupt broadcasting corporation.
A recession. I don't even know where this idea of technical recession came from, because 2 quarters of negative GDP is not even a technical recession, it's a precondition. And yet, Rosemary, I'm not sure that that's even the conversation we should be having. What sort of aggravates economists right now in Canada about this is not the nitpicking over the definition of a recession, it's that we're having a discussion about the wrong diagnosis. We're talking about the patient having a headache when they have a broken arm that needs to be addressed. The problems facing Canada right now are not that growth is contracting. The problems facing Canada is an ongoing affordability crisis, from everything from food to housing. Business investment is very weak. Youth unemployment is high. And while Canadians may feel like the word recession encompasses all those things and validates those concerns, well, again, it's the wrong diagnosis. So it's neither accurate nor helpful. What we have to do now is say, let's put aside this technical concept of GDP and focus on where are we heading next. Where we're heading next is better than where we've been in the last 6 months, but it's a long way until the policies we've seen from our federal government start to really impact growth and make Canadians feel like we're coming out of darker times.
I guess she went to school in some liberal college, I guess, because the rest of the world say 2 negative GDP months is a recession. So I guess the rest of the world is wrong and she's right, I guess. There you go. Corrupt Broadcasting Corporation, CBC. There's some pockets in here that got extreme amount of rainfall. I had heard, and I can't verify or didn't verify yesterday, that there was like 6 inches of rainfall in parts of the Swan River Valley. So I'll maybe have that confirmed in the next episode here. But you can see there's some extreme rainfall in some of these areas here for sure. Another risk of storms going to be kind of skirting the Manitoba, the U.S. border. This is the anomaly, so you're going to see more moisture starting to hit some of these areas. I thought this was just interesting how the weather or the wind kind of progresses here too. Picks up, gets into some more color, and then drops off again. But that's with changing of weather systems. But it even shows the wind direction. I thought was kind of interesting, and we could dive into it a little bit more if anybody wanted. Here's your soil moisture across all the growing areas in Canada, U.S. You can see that the corn, soybean growing area does um, get wetter, and usually wetter doesn't make poor crops unless you're underwater. Quick look at the market. November canola is down $5. Rapeseed is down 3.25. Soybean oil is down 27 points at 74.29. Crude oil is down below the $90 barrel at $2.07 lower. Diesel fuel is down another 5 cents at 3.55. Soybeans basically flat at 11.16. Spring wheat is trading flat as well at 6.20. Hard red winter is flat at 6.30. Milling wheat in the Europe is down $1.25 a ton euro. Corn is up 2 cents, 2.25 cents at 4.21, and the Canadian dollar is up 11 points. Thought I would just show this, some of the relationships of canola. So if we look at the relationship of canola to soybeans in the last 6 months or 3 months is only 32%. But if you look at it over the last year, it was closer to 56%. Now, the one that I've been paying attention to is the soybean oil to canola, and it's currently just at 70%. And then when you look at the soybean oil to canola, and it's over the last year, it's not quite as high. You got to get there. Soybean oil. It was basically flat. So anyway, either way, I'll keep paying attention to these things. Soybean oil and canola are a very strong relationship. Soybeans not strong at all when you look at soybeans to soybean oil. Quick look at the futures here. So we are from highs to lows. We're trading towards that 61.8 retracement value, which is your 100-day moving average as well. We'll see how it all trades here, but we'll see if that's in July, and if we get looking at the November 61.8 gets you right down at that 740 kind of a mark, which is the bottom end of this range that I have highlighted here. European canola basically trading sideways. Soybean oil futures is the one I'm paying attention to, and it's right in that 38.2 retracement. And if it were to fall down to that 61.8, it would be in that 70-cent mark rather than 74 cents. Soybean futures, it just keeps on leaking lower here. Crude palm oil, basically trading sideways. So if you just look at this channel, it's been going sideways since March. Right at a pivot point here for the crude oil futures. And New York Harbor diesel fuel has had a few days of down, and we'll see if it continues. If it can break down into this area, it should be a buy, I would think. And you look at gasoline is basically trading sideways for some time. Here's the Canadian dollar slide. Next area to maybe if it cannot hold and bounce here, expect it to possibly bounce and then maybe fall apart again. U.S. dollar index, lots of strength. S&P pulled off this last few days, and so did the Nasdaq. Quick look at wheat, trying to level out here as we approach the 61.8 retracement value here. And it did break last week, and yeah, we'll see if it can kind of hold out here rather than it would be nice to get a little bit of a bounce to get some more sales made. Here's your response here for 5% complete. Is your Kansas harvest. It is earliest it's ever been, and there is some poor crops out there, of course. Everybody knows. And here's the Kansas, Chicago. Chicago on December is actually looking to potentially bounce off that 200-day moving average. Corn futures just keep on leaking. Your cattle futures right at that 38.2 retracement value. And the feeder cattle right at that 38.2 retracement value as well. hog futures definitely looks like it's going in that same direction as the Canadian dollar, almost the same chart here. Looks like we're going to approach that 94 cent or $94 hog futures and USDA in a few days here.